Hello traders, hello everyone, my name is Grega Horvat and welcome to a week ahead video. I will cover the week ahead today because Blake is out for a short vacation with his family. So I will walk you through plenty of charts here, and because of some very interesting development in the last few weeks, I want to start with the dollar index. Now, what is the big picture of dollar index? Well, I'm definitely bullish on dollar index and will expect more upside as long as we are above this very long-term trend line. There was a low that was put in place here in 2018 in February, and what is important is that from that area we have seen a 5-wave movement. So this 5-wave movement, which is seen on this daily chart, represents part of a bigger bullish cycle, which means I will expect even more upside, but after a pullback. We have to understand that nothing moves in a straight line. And what is interesting is that last week we got a very decisive push out of this upward channel, as you can see. So in my opinion, we are now probably in a first leg of a minimum 3-wave retracement, because as you know, corrections are always made by 3 waves, and this correction, this pullback, should take us back to the area of a former wave 4, ideally to termination point. And termination point of this wave 4 was which was a triangle, was here around 95.20. Of course, there can be even deeper pullback, but this is the first interesting support. But we are now still only in the first leg of decline, so watch out for even more weakness after a pullback. Okay, we can still be here making only wave 3 of A that I'm tracking. So in my opinion, this reversal that are happening right now suggests that dollar will see even more downside in the next few weeks, maybe for whole summer. Now let's take a look also on euro dollar. Obviously euro dollar in such case should stay under pressure, but because we said that firstly these corrections will unfold, I'm looking for a 3 waves correction to the upside here on euro dollar. Notice that I'm tracking here a very nice ending diagonal that can be put in place here, that put a low in. If that's the case, then whole ending diagonal, whenever it's completed, will be fully retraced, and the beginning of this ending diagonal was right here. Okay, it was in March 2018, and also there is definitely very interesting two swing highs that can represent a resistance if we will see a recovery up into this area. But for now we have to focus on 3 waves, and we will see where we go from there. We are still only in wave A, wave B yet to come, and then wave C. So in my opinion, there will be even more upside. On the 4-hour chart here on the right, I see that we are making this wave 3, expect a wave 4 pullback, and then even more upside for this wave A. Okay, now let's take a look on cable. Pound was is probably one of the weakest when I'm comparing it to the US dollar. Okay, so I'm not really sure if I would want to look for pound longs against the US dollar. Probably not. And also the reason is the price itself. I mean, clearly we are in a very big range here. Okay, but we are now at the lower side of the range. So important is what will happen from here. I've been watching the 78.6% fib retracement, which so for now it holds, but what is really concerning is that in the previous bearish decline we have got this breakdown. Okay, and normally this represents that bears are very strong. However, price is now recovering, and if price would be able to move above this swing low here, which was at 128.65 around there, then I would say that more upside is still in the cards for pound. Okay, but as it is right now, it's really just we really have to be patient and wait on whatever markets want to do, and then we go from there, because this decline can obviously still be counted as an ongoing bearish impulse. Okay, and you definitely don't want to be trapped into this weakness if you're looking for long. So important is to wait on this overlap, and then we see what will happen next. Also, on the 4-hour chart, what you can see is we have 5 waves down here from here. Okay, so the idea is that more upside is definitely coming for the start of the next week. Now let's take a look on Aussie. Now Aussie has some very clear wave structure. I know that this was a very boring, deep and overlapping pullback from start of the year, but notice the pullback was 61.8% compared to the previous, this spike low of the year. And what I really like is that this 61.8% held very well and actually caused an impulsive recovery. As you can see here on the 4-hour chart, we have waves 1, 2, 3, 4, 5, and also we have moved back into this previous area, previous range. This is confirmation that this was not wave 1, wave 2, wave 3, and this is not wave 4, because rules would be broken. So in my opinion, this represents that this decline is completed, right? It was an ABC move that is part of a higher degree complex correction. So I think that even more weakness will follow, more gains, more strength will follow, and watch out for a pullback that could actually be very nice if you're looking for possible entries. Also, as you see right now, maybe there can be a head and shoulders unfolding as well. Okay, so we will see if this wave 5 really puts a high in place at the start of next week, and then we see a short-term pullback. Now let's take a look also on dollar CAD. Dollar CAD also very weak. We have been waiting on this reversal for a while, and the reason why I was bearish is because this was a very strong drop here, as you can see, from 2019 highs, and then we have just been overlapping, still moving to the upside, but there was no real bullish momentum. Okay, no real volatility. So in my opinion, this was a clear evidence, clear example of a corrective movement. How corrections looks, they are deep just to confuse traders, but they are overlapping but still slow. So it's very hard to trade within this correction, but whenever you have this strong reaction away from this, or in the opposite direction of this corrective movement, this is normally an evidence that price action is waking up. You can see an impulsive activity, you can see a decisive break below this trendline support. So in my opinion, this is an impulse that will take us even lower, ideally into this wave C. Okay, and if I'm on the right track here, then wave C can actually be very similar to wave A. So I'm looking for a potential drop below this wave 4, below this wave A level, and then a reversal to the upside maybe later this year. Now let's take a look also. New Zealand dollar is also in a very similar situation. I mean, this was on the 4-hour chart. You can see some wedge here. I see this level, this as an ending diagonal that can actually represent here end of this wave C. And notice that this wave C was part of a very deep complex correction, but still not below this starting point of a bull market in September. So since we have seen a very nice reversal, very nice bounce from this lower trend line support as well, this red trend line is shown here, I assume that even more upside will follow. Why? Because on the 4-hour chart, away from that trend line that I just showed you, the move is looking to be impulsive. It's a very strong move in a very short period of time. Also, we have seen a decisive break above this upper parallel trend line, and normally this represents the activity within wave 3 of an extended very strong movement. So I'm thinking that even more upside will follow, and that this whole ending diagonal will be fully retraced. So I'm watching back for a movement into this area, or even higher if we consider that this whole decline can be an ABC movement, and that we may see a pusher into big wave C, okay, of C actually, that is part of a ongoing, possibly ongoing triangle. Now let's take a look on gold. I mean, if dollar is really headed to the downside, then I really have to consider that gold may see more upside. I mean, I have been waiting and watching for these two different wave counts on a weekly degree, where the first possibility is that this is actually a triangle now at resistance for wave B and that we'll see a drop from here, or that this is triangle in the middle of this wave B and that we'll see another push higher, maybe retest these previous swing highs from 2013, and then we'll see a reversal to the downside. However, for now, I still don't have an answer which count should be correct, because we are at the potential resistance. But what is really important is that in the previous drop we got 5 waves down. So whatever happens, I think that upside will be limited and that gold will sooner or later come under pressure. But this may come in play after dollar index will complete that ABC pullback that we have been talking about. So for now, I think that we really should be aware of possible more upside here. Okay, also why I think that this may happen is because on the daily chart we have an ABC drop here, followed by a very strong bullish reaction. And notice that this bullish reaction is not made by 5 waves yet, which means there will be more upside coming. So ideally we are now in a wave 3, expect a wave 4 and then wave 5. And whenever we get this wave 5, the question will be if this upper side of this triangle range will be broken and that we maybe can expect then more upside for wave C, or we will just complete this wave E at higher prices and then we see a reversal. It's still do or die zone around these highs. Also, silver, I mean, the reason why discount we should pay attention to discount is silver as well. I mean, silver showed us a very clear reversal. You can see a very nice deep but overlapping pullback, clear corrective movement, clear corrective activity down from 2019 highs. And notice that this reversal then was very strong, very sharp out of this downward channel, and this is your confirmation that bottom has been put in place. So you know in which direction silver will likely move in the coming weeks. Probably to the upside with at least 3 waves, because this is only first leg of recovery, but any reversal, any corrections should be made by 3 waves. So I think this is wave A, you will see a wave B, and then more upside for wave C. And if that's the case, then obviously gold will also be trading higher, probably. Now, this pullback, this rise in ABC structure can represent wave E of a very big triangle consolidation that I'm tracking here on a weekly basis. So this was wave A, B, C, D, and we will see now wave E and then move to the downside. So more upside is available, but whatever we have this wave C, that's when we really have to be careful for a potential new reversal to the downside. Now let's take a look on crude oil. Now crude oil, notice a weekly chart. I mean, this was a clear ABC movement. I have been talking about this for a while, especially highlighted also this very strong breakdown and said that probably because of this very strong breakdown in 2018, any rally will be corrective and limited to the upside. And what had happened is that actually this recent swing high came in at this trend line, previously broken trend line, that turned into a resistance here. Also on the daily chart, notice that this drop actually occurred from this previous swing low. So these resistance levels held perfectly. Not only that, we can see that drop is very sharp. It took us all the way down to the previous wave B swing low, which is confirmation that despite a very sharp recovery, this was only a correction and that we are now turning back to the downside. So I think that there can be more weakness coming on crude oil, but probably now we'll see a slowdown here for wave 4, maybe just consolidate a little bit longer, maybe for a triangle, maybe for some kind of a flat. But the idea is that we will see a slowdown here above $50 per barrel, and then we see another drop. Okay, so crude oil, I think it's not looking good actually. Okay, despite higher stocks that we have seen the last week, I think that if we'll see higher stock prices, that's the timing when crude oil may actually make this wave 4 correction. So on the S&P 500, I mean, firstly, let's take a look on the monthly chart. What is really important here is that we are trading still well far away of this lower trend line support of this upward channel. So this was a base channel. So in my opinion, as long as we are above this trend line, there is ongoing uptrend, no doubt. So why would we say that the top is here in place? But when we have plenty of options, different options on the table that suggest that there will be more upside, there's definitely much easier to predict the market to move back to new highs when you're trading at the highs rather than saying this is a top in place and we are going into the bear market. There will be a bear market, no doubt, but we have to focus on this, what is happening right now. And still, I see it here, uptrend in progress, and ideally we are here in a wave 5. Now, first target still haven't been achieved here around 3000, and there is even more upside available for the second target. So in my opinion, we should stay with this uptrend. Also, here was this wave 1, 2, wave 3, wave 4, wave 5, and then we have seen nice ABC setback right into this area of a wave 4 support. And what is the most important is this breakout. Okay, very strong, clear impulsive reaction, which means more upside will follow, especially after pullback. So I will definitely keep an eye on pullback and look for possible longs if we'll see a nice setback here in 3 waves. Okay, now let's take a look also on German DAX. Same thing. I mean, clearly this is an uptrend in progress. Also, notice that on a monthly chart, this last year pullback was clearly in 3 waves, which means should be fully retraced. So wave 5 has room for further upside here. On a daily chart, we have higher highs, higher swing lows, which means this is clearly textbook uptrend in progress. So I will continue to expect more upside, especially because of these recent developments, which showed us a 3-wave setback back into this gap area here. Also the trend line support of this corrective channel held, and now we are seeing a reversal back to the upper side of the range. So I'm thinking that this is beginning of a new leg that will take us higher. Now let's take a look also on some yen crosses. I mean, if stocks are really headed to the upside, then I think that maybe those yen pairs can be about to shift really soon. They're still trading at some interesting supports. I will take a look on ASEAN and CAD. So here's the ASEAN. Also notice very nice deep pullback right into 38.2%. So observe the price action, what will happen here. If we'll see more upside with aggressive buying here in impulsive fashion, then watch out for pullback for possible longs. But CAD is probably even more interesting. Notice an overlapping decline in 7 swings with the recent movement right into 61.8%, right into this parallel trendline support. But I'm not saying that we should be buying here. I'm saying that we have seen a reversal from that area. So this was confirmation that supports held. So market tells you in which direction is likely to going now, probably to the upside. Also on the 4-hour chart, notice that we can count 5 waves up. Okay, so maybe even again another head and shoulders could be unfolding from here. There can be some temporary resistance, as you can see at the former swing highs. So maybe this was left shoulder, head, right shoulder, neckline, and then we will see more upside. Okay, that's definitely very, very interesting structure if we consider every parameter that we see here based on the Elliott wave theory. Also, now let's take a look on Pound Aussie and Pound Kiwi, because this one is having a very nice wave structure. So pound Aussie is the first one. On the weekly chart first, you can see that market actually made a very nice breakdown, the first breakdown here in January, February of 2016. Market made a very extended strong drop. Now we are here recovering in another channel. So imagine what may happen when we get another breakdown here. And if we take a look on a pound Aussie daily chart, you can see that this recent breakdown, okay, also came, this reversal came after a wedge here at the highs. So I'm really thinking that there is room for much more weakness here, because this ending diagonal may complete a higher degree complex correction. Okay, so I think that there is a lot more weakness available on pound Aussie, at least in the short term, if we consider this reversal here to the downside is impulsive. So watch out for a small rally and then watch out for more weakness. Now, pound Kiwi also has a very nice clear wave structure, another channel here which suggests that pound can be weakening. Notice a very strong drop, and then you have a corrective rise right into this psychological level. We have seen a reversal in 5 waves in impulsive fashion, which means more weakness should be followed. And if I'm on the right track, if this was the correction, then we know that whole correction should be fully retraced, which means drop towards back to this 2018 swing low should be in the cards. On the weekly chart, you have also this similar breakout of on a higher degree trend here as well, which means that clearly trend is down, especially if we also consider that this channel, when it was broken, it reacted as a resistance here. So I'm really thinking that more weakness will be seen. Okay, traders, thank you very much. I hope that you enjoyed this video, and I will give you more fresh updates on our website. Have a good day. Bye.